Now today is the 25th of May. You can see on the screen here we had not a lot of news during the morning in terms of or for the pairs that we trade. On in the afternoon in New York time, 1:30 p.m. you can see on screen UK time, we actually had some data come out, jobless claims for the US and GDP price, etc. Overall, we can see jobless claims slightly went up, but however, this was due to figures being revised. So actually, those jobless claims would have gone down and they were lower than forecasted and consensus. The GDP growth rate also was actually higher than previous. Sorry, higher than a consensus and forecast, but lower than previous. And same for the price index as well. And corporate profits a lot lower actually. So overall, fairly mixed. Apart from the Chicago Fed national activity actually going into the positives rather than the negatives, and this also got revised. That's what the little R is on the screen here. Revised from minus 0.19 to minus 0.37, making it look like it actually did a bigger jump than it did previously. They've been doing a lot of revisions on the data as it's come out. I think it's quite cheeky from the statistics Bureau of Statistics Labor, but overall more towards the dollar, giving it a bit more strength or short-term strength. So if we hop over to DXY, we've broken 104, and we're actually trading above 104 200. We were during this session, and New York, you can see the big push once the data came out from 104 or just under 104, pushed above, and there's a catalyst to continue trading above it. We're seeing a lot of strength coming back to the dollar, slowly going back into the dollar domination narrative. And if we have a look, and we didn't take any trades in GJ, GJ is just in this horrible intraday range. Not really any point trading that. I'm not going to. Gold, you can see where the data came out. Very low volume of volatility while we waited for the data. 15-minute candles producing about 18 pips on average, on roughly. And then as soon as the data comes out, we get a nice, huge monster 200 pip candle on the 15, providing a lot of volume and volatility into the markets once that data was digested into it. You could have taken impulsive entries. Wasn't feeling that myself personally. I always like taking the retest entries, and you can see exactly where my entry was. Hopefully, if you've been watching the videos, we had a double bottom at 119.39 500. We came back to retest 1953, and my entry was actually once we formed a double top. If you look on this morning when I posted what I was expecting pullbacks potentially to 167 600 before the data, to then continue down to 1953, and then also 1953 down to 1945. We didn't actually break above the 1967. We did tap or get near enough to 1965 rejections, then continuation down. I took these sales from 1953 down to 1945 on this rejection candle here. So if we hop over back to this screen, you can see that nice double bottom, or sorry, double top. We hop over to the market terminal. Let's have a look. Nice pause today. Unfortunately, I didn't take advantage as much as I wanted to, if I'm honest. I think the execution, the entry was perfect. There was no better entry than this. Yeah, I was very confident with the trade. I had no hesitation. I saw this form. As soon as I saw this form, I waited for the second one, saw this bearish candle. Once this candle closed, I entered. No hesitation, 20 pip stop roughly. And then you could just see continuation down. My issue is I didn't expect, and this is where I went wrong, is I should be taking profits at 1 to 3. You know, even this here was a 1 to 4 when it reached down to here, and that's 1945, and that's a key level. We saw reaction at this key level. It's no coincidence, right? I think, in my opinion, there was greed in the back of my mind because my TP was hard set. You can see at 1940. The reason I got that was you can see here to the left where we've just created a low. So my whole idea was, right, we've just created a low with volume. We're going to continue and retest that low at least before continuing back up. We didn't get that. I need to understand that, right, once we get this roughly 50% pullback of sorts after a big impulsive data move comes out, I need to take advantage, but in the correct way by maximizing my profits. If you have a double top here, you have your 20 pip stop, and you're retesting a key level, you need to be securing profits. We're not going for these long-term trades in terms of intraday trade style where I'm holding trades for a day or two. I'm trying to be a bit more fluid, especially when it revolves around data releases. You need to be in and out of the market. So I waited for 2 o'clock. This is 2 o'clock candle. We get the 4-hour pullback. it just all lined up perfectly. But for me to fail to close at 1945 is a lesson to be learned here. So once again, I think it is greed creeping in there that I'm not securing those profits. I'm wanting to get retest at 1939 500 level, but unfortunately the volume in the markets is not a lot at the moment. There's a lack of it. A lot of investors are on the sidelines. We have the VIX actually creeping up to 19 now, but overall there isn't the same volume as I was, let's say, compared to this time last year. So I need to be wary of that and understand that the market isn't in the most prime, the easiest of printing money phase, let's say. So catching these small moves and very valid moves is what will separate myself from making my winners even bigger when the time comes when the markets go back to a bit more higher volume and volatility sessions. This move was needing to be closed at 1945. Like I said, it was a 1 to 4 trade, more than, or just, I'm sorry, 1 to 3.5, more than valid to close the trade. And going forward, I unfortunately will have to, it's a profitable trade, but not as much, or it should have been a lot more profitable than it was. So going forward into tomorrow, we have to look at what data is coming out. If we swap screens, we can see retail sales in the morning for GBP, month on month and year on year. I'm expecting this to be negative. I can see that they are as well. I don't expect. I mean the data with high inflation, the struggle of unemployment increasing in the UK, it doesn't bode well with future data releases, right? Especially when it's to do with the UK and people spending. Retail sales. I can't see that being positive. So we're expecting a negative one tomorrow. What does that mean? It means obviously GJ is going to have short-term weakness. I don't really want to trade GJ while it's in this range, the intraday range that is. I don't think it's a smart decision to. You can see the big range from here to here, 130 pips. However, I do back trading from 171,400. If you can get from the bottom of the range to the top, it's a tradable range because it's so big. But trading when you're in the middle here at 172 or 172,200, not much point. The risk to reward is not worth it. So keep that in mind when you go into tomorrow. And we've also got a lot of data for the US tomorrow. That's going to be a big day in terms of adding a bit more volume and volatility into the end of the week. We can see personal income, core PCE prices, and durable goods orders all coming out at the same time. I'm sure, and from looks of, we got a bit of mixed forecast and consensus coming in with a variation of positives and negative numbers coming out. This will no doubt obviously affect the volatility and volume in gold, and I think it will be best to allow the data to be digested, to be released, digested, and then pounce on your move after that. So depending on, or play the narrative with the data. So if the data comes out surprisingly all in one direction or one-sided, which is what we want, makes it easier for us to trade, then hop on that. If all the data comes out surprisingly positive, guess what's going to happen? Dollar's going to be stronger, and good data now is meaning good data, meaning dollar is going to gain strength in that short term. So we could potentially see tonight slight pullbacks to 1953, and then continuations back down, and maybe even break 1939.50 with this potential data. But that's all data dependent. Don't jump into trades until you're confirmed with the narrative and the bias that's going on. So take it easy tomorrow and make sure you're aware of all the data that's getting released.